Hello, my dear students. Welcome to online accountancy class. In this session, we are going to consider a revision chapter, that is change in profit sharing ratio. Mainly, we have to learn the major steps from this chapter. In the last class, we already completed that major steps. Like there are the step like mainly the calculation of goodwill, calculation of sacrificing ratio, gaining ratio. So this part we completed, calculation of sacrificing ratio as well as gaining ratio. We know that is SR equals to OR minus NR. When it is gaining ratio, then NR minus OR. So that way, that problem also shown. Considering one problem, how to calculate sacrificing ratio, gaining ratio. This is that numerical problem where it is shown sacrificing as well as gaining ratio. After that, we consider valuation of goodwill under different method, like first method, simple average profit method. That was also explained in the last class. Here, average profit method means the total profit divided by number of years, and goodwill equals to average profit into number of year purchases. That is the formula you have to remember. When it is average profit method, second one. So under that method, value of goodwill equals to weightage average into number of year purchases. Now weightage average, when you calculate that time, you have to find out the total product divided by total weight. Total product equals to year of profit into respective weight. If you multiply, then you will get that is total product. Here is that problem. That way we did this, like already we explained that. There is a profit, here is the weight. Now after that, profit into weight, that is called product. So total product as well as total weight. Total product divided by total weight equals to weightage average profit. After that, we can find out the value of goodwill with the base of number of year purchases. This one also explained. Now super profit method, in excess of normal profit, that is called super profit. Under super profit method, goodwill also may have to calculate, and last class we already explained here. So the formula is that goodwill equals to SP, that is super profit, into number of year purchases. Now like actual average profit minus normal profit. Sometimes normal profit may not be given here, so that way you can calculate here. Average capital employed into normal rate of return divided by 100. So that way you can calculate. So that problem also explained here. Now there is method for capitalization of average profit, that we have to explain here. So today we are going to explain in details, that is next method, method for capitalization of average profit method. Under that method, we have to know that is capitalized value of average profit as well as actual capital employed. Actual capital employed, that is capital investment at the time of the starting of the business. Now business will run, profit will earn. So on the basis of profit, what is the value, that capitalized value which comes from average profit basis? So that you have to find out, and this is the formula here. Capitalized value of average profit equals to average profit into 100 divided by NRR, that is normal rate of return. So this is one example which will clear here, that we will calculate, that is capitalized value of average profit. And another way, like capital employed simple, that is capital investment. We know from class 11, that is from the like fundamental of accounting equation, that is A equals to L plus C. A equals to total asset, L equals to external liability, C equals to capital. Now suppose if you want to find out that is C, that is capital, then A minus means asset minus external liability. That way you can find out. So capital employed equals to total asset minus external liability. But in this time, goodwill as well as fictitious asset, that is also have to consider, that you have to deduct here. And if like opening and closing, both the capital are provided, that time you have to find out, that is average capital, opening capital plus closing, and that you have to consider, that is capital employed. So regarding that actual capital employed purposes, like anyway, opening and closing capital provided, then we take the average profit. Otherwise, we will apply that is fundamental equation, accounting equation. From total asset, we can deduct external liability and we will get that is capital. So this is our problem here, like calculation of goodwill, value of goodwill. Here the problem related to this topic. From the following information, calculate value of goodwill of the firm by applying capitalization of average profit. Total capital of the firm, it was provided 16 lakh and normal rate of return 10%. Profit for that year it is 2 lakhs. See, this is a formula: goodwill equals to capitalized value of average profit minus actual capital employed. So first of all, we have to find out capitalized value of average profit. So this is that total capital employed, it is provided directly. So here no need to find out the average. So that will be considered as the average capital employed. But here you have to find out that is capitalized value of average profit. So here it is average profit 2 lakh and rate of return rate is 10%. So 2 lakh into 100 in this formula if you use here, average profit 2 lakh into 100 divided 10, it is coming 20 lakh. So 20 lakh, that is actual average capitalized value of average profit, and 16 lakh, that is capital employed. So therefore 4 lakh goodwill is coming. It is also simple, not difficult. So here is the solution. Average profit 2 lakh, capitalized value of average profit, it is coming 2 lakh into 100 divided 10, that is 20 lakhs, and capital employed provided 16 lakh. Therefore 20 lakh minus 16 lakh, that is 4 lakh value of goodwill came. Last method, capitalization of super profit method. Under this method, calculation of goodwill quite easy. Just have to remember that is how to calculate the super profit, and we know from that is method 3 how to calculate the super profit. Super profit equals to actual average profit minus normal expected profit. So here when you find out the goodwill, value of goodwill under capitalization of super profit method, that time super profit into 100 by NRR. Very simple. This is the formula. Goodwill equals to SP into 100 divided by NRR, normal rate of return. This is one problem here. There are two partner, red and white, and their capital was 3 lakh and 2 lakh. So during the year ended 31st March 2020, the firm earned a profit of rupees 1,50,000. Calculate the value of goodwill of the firm by capitalization of super profit, assuming the normal rate of return is 20%. So here we have to find out first of all super profit, and when you find out super profit, we will use this formula. So how will we calculate the super profit? Then here it is capital employed, it is provided. Both the partners' capital if you add, then total capital employed will find out. So red and white, red capital 3 lakh and white capital 2 lakh. So 3 lakh plus 2 lakh, 5 lakh. 5 lakh there upon 20%. So it is coming 1 lakh. So 1 lakh it is like normal profit, and whereas actual average profit is 1,50,000. So therefore we can say here that is 50,000 is the super profit. Actual average minus normal, 1,50,000 minus 1 lakh, that is 50,000. Now we will put under this formula SP 50,000 into 100 by NRR, that is 20. So 50,000 into 100 divided 20, it is coming 2,50,000 value of goodwill. So this is our solution here. Solution, first of all, capital employed total, that is red and white, 5 lakhs. Normal profit equals to 5 lakh into 20%, that is 1 lakh. So average profit, it is provided in the question, 1,50,000, whereas normal profit 1 lakh. So therefore super equals to average minus normal, that is 50,000, that is called super profit. So therefore value of goodwill equals to SP into 100 divided by NRR. So SP is 50,000 into 100 divided 20, that is 2,50,000. Value of goodwill is coming. So these are the maximum method, 5 method. Simple average profit method, simple average profit method. From backside if you go, capitalization of super profit method, capitalization of average profit method, super profit method, weightage average profit method, and simple average profit method lastly. So there are 5 methods, but mainly we can see the use, that is simple average as well as super profit method. So these 2 methods generally we have to use for the calculation of value of goodwill of partnership firm for all this chapter, mainly admission, retirement, death. Not only that, in case of change in profit sharing ratio also, value of goodwill may have to find out, but we use these two methods. Application of these two methods is more, so we have to take care of these two methods and we have to learn in details mainly these two methods. We have to remember all this, but we'll practice more these two methods. Okay, I hope so. This will help to our learner. As a recapitulation, I have to take it. I am going to conclude this session, and the next session we will consider one more numerical problem related to this topic, and afterward that chapter revision will be over and we will enter next subsequent chapter, that is admission of a new partner.